Ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the sterling versus US dollar as we head toward the close of the current trading week and look forward to next week's trading. The pound versus US dollar moved lower in trading here today. And where do we go? We went to test the low price from yesterday's trade, the low price for the week, the low price going back to October 4. And what did we do? We found support buyers against that level, and the price started to rotate back to the upside. It's been mostly to the upside through most of the European and New York session. In fact, the last, not the current hourly bar, but the prior hourly bar, the price moved above the 100-hour moving average. That was a break to the upside. It should have led to more upside momentum, but what you can see here is that we have a failure above that 100-hour moving average. Now, that's not anything new of late. In fact, in trading here today, we had the failure. In trading yesterday, we had a failure. In trading on Wednesday, we had a failure as well. But all this week, we've also had times where the market came up to that 100-hour moving average and found sellers against it here, found sellers against it here, found sellers against it here, and trading here today. And now we're finding sellers against the 100-hour moving average again. So you can see there's sort of a dichotomy, a little bit of trying to move higher and then failing. And that's going to be all decided next week. What do we do? Right now, the bias is more to the downside below that 100-hour moving average. We got to get and stay above that moving average if we're going to move higher. If we do that, then we can look toward our 200-hour moving average. That's the green line in this chart, and that comes in at 121.96. Earlier this week on 1, 2, 3, 4 Mondays, trade, as a matter of fact, the price moved a little bit above that 200-hour moving average, but ran into this swing area up here near the 122.19 and 122.316 level, and found willing sellers against that level, and we didn't return to that level all week long. So getting above the 200-hour moving average would be something positive, and then we re-look toward this swing area, toward the 38.2% retracement. By the way, this is of the move down from the September low, which September high, which goes way back there to the low price that we saw in the month of October. So getting above that level again, and we haven't been able to do that over the last 6 or so trading days, is required bullishness for this pair to move higher next week's trading. So there is work to do, and the first attempt above that, or the most recent attempt above the 100-hour moving average, failed. And now on the downside, as long as the price can remain below this 100-hour moving average, the bias target would look toward this swing area here. This swing area was nicely developed through here and here and here. We broke below it, and that became resistance, came up toward here, toward it, and found willing sellers, and then broke above it and moved higher, and then tested it 1, 2, 3 straight days through here before moving to the upside. So in trading this week, we did come down to it again in trading yesterday, broke below it, and then moved above it and started its run to the upside. And then today we came down through it, broke below it, came down to our low price from yesterday, and then moved back above it. So this area right here between the 121.05, 121.10 or 11 area, pay attention to that next week. If we move back to the downside, if we get below that level, watch the 120.88 level here, and then we'll look toward our low prices right here. Let's take a look at the daily chart and see where we stand in regard to that. And I want you to remind yourself of the 38.2% retracement. That's of the move up from the September 2022 low to the high price that we saw in the month of July. 38.2 comes in at 120.76. Now, we did move below it and earlier in October, only to find the price move back above it. We haven't been below it since. The low price this week came down again toward that 88 level, so about 12 pips short of that 38.2% retracement. It would take a move below that 38.2 to get traders to thinking that this trend move, the corrective move, is a little bit more than just the plain vanilla of the trend move to the upside. So we do have to get below that level to give the sellers the added confidence that the downside is the right way to go. So you can put probably a horizontal line in here around the 76 level. That's somewhere around there on your chart, just to remind you of that level's importance going forward. And we'll see how it all plans out. So right now, the 100-hour moving average in play, barometer for more upside or downside, and you know the other levels from our technical analysis. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.